Hello everyone, myself Vaibhav. FOMC's monetary policy announcement has changed the trajectory of many of the financial instruments, and S&P 500 is one such where we are seeing the impact at a quite pronounced scale. And I think after this yesterday's decline in aftermath of the FOMC monetary policy announcement, we are likely to see the shift in the stance for the S&P 500 in near term, and we can expect the S&P 500 to continue to decline even in today's session. If you consider its price move so far, it has consolidated on the lower bound, and unless and until we have any fresh significant break above the prior swing highs, I think the trajectory is likely to remain bearish, and we can try to take advantage of that. So we will be looking at what are the key levels which can help us guide while making the trading decisions. So let us get started. If we consider the data docket for the day, earlier we had these Australia's employment numbers, and these are quite good. And if you consider the employment change, we are seeing the addition of more than 100,000. And for the month of May, the exact number is at 115.2 thousand. So that's quite a turnaround compared to more than 30,000 job losses seen in the prior month. The unemployment rate has also gone down to now stand at 5.1%, and the labor participation rate is also slightly higher at 66.2. But even after these astounding numbers, we didn't really see AUD able to the pick up and move on the higher side. Instead of that, we are seeing the continuation of the FOMC's impact, and the AUD has continued to slide against the dollar, and I'm not really expecting any change in trajectory in near term for the AUD. Now moving on to the other data point which we got in the European trading hours, we had these final inflation numbers for the month of May, and finally we have the euro area inflation touching the 2%, which has happened after a gap of many years. And though the expectations are that this inflation uptake is going to be transitory, but we will see. If we consider the ECB's outlook, they are still quite dovish, and I'm not really expecting any turnaround or change of stance in the ECB's policy. Moving to the North American trading session, just a while back we got the initial jobless claims for the week ended 12th of June, and there is slight increase now again after more than 3 to 4 weeks. We are seeing these jobless claims above 400,000, and this time around, though the jobless claims are higher, the expectations are that moving forward in coming weeks, we are again likely to see the jobless claims dipping as the economy is doing quite well, and job loss benefits are also being phased out, and that has started to push more and more people to job market, and as a result of that, the initial jobless claims are likely to come down in coming weeks. And we will also need to be watchful of the Treasury Secretary Miss Yellen's testimony, and we might see some impact on the USD. So that is something to be wary of while taking the trade in today's session. Now let's shift our attention to the technical segment. First, we will consider the outlook for the S&P 500, and after that, we will also consider what's happening in the USDJPY. Let's start with the S&P 500 technical outlook. This is the daily time frame chart, and here, after establishing this all-time high, we are seeing some correction of more than 1 percentage point in the S&P 500, and I think we are past the top in near term at least, and the probability is quite high that in course of time we can expect the S&P 500 to move towards this prior swing low, this immediate low established in the month of May. and that is somewhere close to 4,000, just little above 4,000. And I am expecting the S&P 500 to now continue its correction, and in coming days go on to touch these lows. But of course, our main concern is short-term trades, and there we have to rely mostly on immediate price formation. So even if the probability is quite good that S&P 500 is likely to remain in this bearish stance, but we can't be too sure, and we do need to be watchful, and our focus is going to be on the finding of optimum entry and exit points. So if we have to trade, we will have to keep in mind this lower time frame charting, where we can see that on the lower side we do have the support around this central pivot point, which is there around 4,150, and that is likely to be the near-term target price if you are looking from the intraday or the short-term perspective. If you want to keep the trade open for only a couple of days and not more, then I think the immediate target will work out closer to this central pivot point. And if you consider the regression curve, it is still tilted to the upside, but now that the price action has moved to the lower band, and it looks like that we can even expect break below this lower band, then I think in this kind of scenario we are likely to see this curve flatten, and eventually in course of time it can even be expected to tilt again on the bearish side. So if you want to trade in today's session, you will have to be watchful and utilize this convergence of three SMAs around 4,230. We have these three SMAs, 50, 100, and 200 SMAs converging closer to this price zone, and this is where I am expecting the S&P 500 to find the resistance. If we consider this prior consolidation phase, there these prior lows were also around the same area, so we have these multiple factors which gives us confidence that this is a price band which is likely to pro hurdle if the S&P 500 were to start moving higher again. So in that kind of scenario, I would say that our focus should be on getting the entry as close as possible to this resistance area. And of course, if in case the S&P 500 continues this upward momentum which we are seeing in current hour, and goes on to rise toward this resistance zone, then we will need to allow the S&P 500 to consolidate first, and only after at least couple of hours of consolidation we can think about shorting it again, while keeping the stop loss just a little above yesterday's high. I think the stop loss anywhere closer to 4,260 should be good enough. So you should be targeting your entry anywhere in the price band of 4,225 to 4,235, just a little lower than this 200 SMA. And with that, the stop loss can be kept above this prior swing high. On the lower side, as I said, we can expect the move towards the central pivot point of this month's pivot point series, and that is going to get us the risk reward ratio of better than even 1 is to 2. Now moving on to the currency segment, we will see how far the USDJPY can go after this spurt. If you consider the daily charting, we have this USDJPY now at prior swing high. If you consider this longer term trajectory, then the USD/JPY has indeed reached its resistance area, and the impact of it being felt we saw in yesterday's session. The USD/JPY's gains were kept closer to this prior swing high, and in today's session we are seeing some corrective momentum, and in near term, I'm expecting the USD/JPY to spend more time consolidating than a straight away upward jump. So we will have to be mindful of these daily time frame charts. resistance zone, and we will have to trade accordingly. But if we consider the larger picture, the underlying momentum is still fairly bullish, and after due consolidation, we can expect a break above this immediate hurdle, as we have this formation of the higher lows. So naturally, we can expect a formation of a higher high. That means this time around, we can expect the USDJPY to break above the 111 mark. But we do need to be watchful and see what are the key levels which are going to be helpful while taking a trade in today's session or for next couple of days. So if we consider the price action, we had this prior swing high around 110.30, and this was also the price which was keeping the USDJPY's gains capped in last two trading session before this spurt, this breakout after the FOMC's monetary policy announcement. Now that we do have the breakout, I'm expecting this first resistance of this month's pivot point series to be acting as a near-term support. We also have this consolidation high. So in light of this breakout, we can expect the price band of around 110.3 to 110.4 to act as a near-term support for USD So even if we are seeing some selling momentum in today's session, we can expect the USDJPY to stabilize, and unless and until we have the break below this first resistance of this month's pivot point series, we can be fairly confident of the continuation of this bullishness in USDJPY. If you consider the technical formation, both these parameters are pointing to the continuation, and looking at the regression curve, now that the price action is back again in upper band, we can expect the move toward this second resistance, and that gives us the possibility of profiting around 50-60 pips if we are fortunate enough to get the entry anywhere around the 110.5, but of course after due consolidation, not straight away. So if we have to go for the entry for a new trade in USDJPY, we will have to make sure that the USDJPY holds above these prior swing high, the consolidation highs, which are there around 110.2. So this corrective momentum shouldn't really break the USDJPY below this prior swing high, and it should find some sort of support closer to at least this 50 SMA, and after due consolidation only we should be thinking of initiating the new trade. So I think for today's session it will be fairly difficult to point to a price band where we can initiate the fresh buy trade. Instead of that, I would say that you would be better off sitting on the sidelines for the day, and maybe by the time tomorrow's session start, European trading hours in particular, we can look at the price trajectory, we can look at the formation, and if we see that support levels are being respected, then only we can think about going for the long trade again. But right now, it's not really the time to get involved for a new long trade. That's what I feel looking at the current price formation for USDJPY. And if you get the entry maybe tomorrow, then of course the stop loss will need to be defined somewhere below these prior swing highs. I think the stop loss anywhere near 110.10 to 110.20 price band should be good enough if we get the entry after due consolidation anywhere in the price band of 110.4 to 110.5. And then, as I said, we can expect the USDJPY to climb back toward this prior swing high, this 110.8, or even beyond that. I am expecting the USDJPY to break above 111 this time. So if you are patient enough, you can even wait for that and continue to hold on the buy trade, and that is likely to get you the risk reward ratio of 1 is to 2. So that's my take looking at the current price formation for USDJPY. If any of you have any query or any idea to share, you can write to me in the feedback section, and I would be more than happy to take the discussion forward. Before I sign off, I would also like to remind of the risk associated with trading in the financial instrument, and one should be careful while using the information provided. Have a fabulous day ahead. Do subscribe to the Decoscopy webinar channel to stay updated on market development. See you next time. Till then, goodbye.